Yo investors, so welcome back to the channel. So Nordstrom is sitting at $31. So just a month ago this stock was sitting at $12, and I made countless of videos telling watchers and viewers and investors to buy the stock at a $12 cost base and anywhere below $15, and if you'd bought it you'd be up 150% plus right now. But yeah, before we get into the video, please like the video, please subscribe down below. You don't want to miss out on the next buying opportunity, the next 100% stock. But yeah, check out our content. So we've got a lot of content right now on CIIC, so check those videos out. That could be your next 100% stock. But yeah, let's just get into this video. So Nordstrom is sitting at $31.78. So we're going to talk about, is this still a buy? But yeah, so personally I thought this run up was a long time coming, because when we take, if you go back to March, this stock was very badly beaten down. Then came September time, it kept going down. It took a huge beating. Then when you compare it to comparison stores or stocks such as Dillard's or Macy's, these stocks saw a much stronger recovery earlier on. So I thought Nordstrom's recovery was a long time coming, because they did go as low as $11 in October time, so it went very low. And when you compare the price to the actual company, it was an easy buy. I always said from the beginning I saw this stock going back up to that $40 cost base that it was trading at before COVID. So one of the main reasons as to this run up was, first of all, their third quarter earnings, which they absolutely smashed, and also the news of the COVID-19 vaccine, which in the UK is currently being administered and it's been approved, and people are getting vaccinated. So the vaccine's out basically. And yeah, so let's just get into a bit about the third quarter earning. So third quarter earning, analysts expected a loss of 0.13, so 13 cents per share, but Nordstrom came out with 34 cents per share, so that's over 300% what was expected or predicted. And also the online presence brought in $1.6 billion in sales. That basically accounted for more than half of their sales, so 54% of their sales were online, and this is absolutely amazing. And this showed a 37% increase year over year in digital sales. So in a way, this pandemic could have been a blessing in disguise for them to improve their online presence, because once stores are back and open and you've got the online stores, the digital sales are all-time high and all the stores are back and open, this company is gonna do very well. But yeah, like I said, it was sitting at $40 per share before COVID, and obviously with vaccines coming out, stores are going to get back to 100% capacity. Then you put this alongside a growing online presence, this company with this stock will outperform what it was doing before COVID, and I see it easily exceeding that $40 cost base. So if we're talking long term, let's say 2 to 3 years, this company can go up another 100%, so in that $60 cost base. Then if we're talking short term, axing this company going back up to $40 as soon as next year, so 2021. However, as of now, I will not be buying any more shares. So I'm quite heavy on Nordstrom. I did sell out 20% of my position just to take profit, because I always feel like it's important to take profit along the way, because I was up huge 150%, so I sold out 20% of my position, but I'm still holding strong. But as of now, I will not be buying any more shares. But if it was to dip below 20, not below 20, but in the low 20, so below 25, then I'd highly consider buying a lot more shares. But for anyone that's a new investor in Nordstrom and trying to get in, the way you have to look at it is, this time next year with vaccines coming out, everything's gonna open at 100% capacity. Do you see the stock being less than $30 or even being less than $40? And the answer's no. So if we're talking from a long-term investment standpoint, this stock for me is a definite buy. if I'm holding stock for a year, 2 years, I'm not gonna lose money in this stock. So in that sense, this stock is a buy. And also, if you've done your due diligence and you've done your research into this stock and you feel it's a buy, even buy it now at this $30 cost base, buy, maybe build a small position. Then if it dips, and once you get short sellers start selling off or retail sellers start selling off, if it dips, then you just buy the dips and average down your cost base. But if you're just trying to jump in due to FOMO, the fear of missing out, and you just want a quick profit, then this is not the stock for you. I highly recommend doing your own research and your own due diligence. But regardless, this is a great investment. This is a great long-term, this is a great short-term investment. Next year, I see going to that $40 cost base that I was at before COVID. Long-term, this stock can go up another 100% to that $60 cost base when you've got the online presence and you've got the in-store at all-time best. So, like I said, this COVID could have been a blessing in disguise for this stock. But yeah, this is just a quick video to let you know what I'm doing, let you know what you could do regarding the stock. But yeah, I hope you enjoyed this video, and don't forget to give a like down below and also subscribe to the channel, and we'll help you find your next 100% stock. So if you haven't checked out our video, check out CIIC. So we've got a lot of videos on CIIC. So that for me is the stock that I'm currently loading up on as of now. So that for me is my next 100% stock. So check out those videos, and please subscribe. Help us reach 1,000 subs by the end of the year, and we'll help you do well in the stock market. But yeah, that's the end of the video. Thank you for watching, guys, and we'll catch you in the next video.